Hello, in this lecture we're going to continue on with some shorter test type problems that could be in the format of multiple choice problems. So here the next one has, on September 12th, V company sold merchandise in the amount of $3,950 to J company with credit terms 2, 10, and 30. So 2% if paid in 10 days, otherwise it's due in 30 days. The cost of the item sold is $2,725. V uses the perpetual inventory system. On September 14th, J returns some of the merchandise. The selling price of the merchandise is $340. The cost of the merchandise is $240. Okay, J pays the invoice on September 18th and takes the appropriate discount. The journal entry that V makes on September 18th. Okay, so we basically got to get to this last journal entry over here, and I'm going to put over on this side, basically what we are tracking at this point is accounts receivable. So we're going to try to see what the accounts receivable is at the end, and then we'll have to make that adjustment in accounts receivable. So I'm going to have our T account for accounts receivable because the ultimate payment will be what is owed less the discount. Then I'm going to go ahead and go through our journal entries, and this might be a bit longer way of doing it, but it'll give us the bigger picture on how, we're going to get to where we want to get. So on September 1st, the V company sold merchandise in the amount of $3,950. So if we sold merchandise, what would happen? I'll put it up here, we would debit accounts receivable for $3,950, and we would credit sales or income or revenue. I'm going to make mine a negative for the credit column here. What also would happen, we could put it in a separate journal entry, or we can keep it in the same journal entry. I'm just going to keep it up here. Cost of goods sold would then be affected, and that would be for the 2725. And we would have the fact that the inventory is going down. Inventory is going down by the 2725. So these are the two, you can think of them as two separate journal entries. Basically, they happen at the same time. This is the sales half, this is the fact that the inventory is going down, and the expenses of cost of goods sold are going up. What happens to our T account right here? Well, we can see that accounts receivable is here, and that's going to increase the receivables. And if we sum these up, this is the sum of these, is going to equal the sum of these. And of course, the debits are beating the credits at this point. And then we're saying that September 14th, J returned some of the merchandise. The selling price is $340. So the merchandise came back, returned it. Basically, we reverse this transactions for the most part, with a bit of one exception, basically. So if we reverse this first half of it, we would have to debit sales, but we don't usually debit sales. We debit what we call allowance, for, sales returns and allowance. So that's like a contra sales account that we put in place just for this type of occasion because we don't like to reduce sales. Everything else is basically going to be an exact reversal, meaning the credit's going to go to accounts receivable because they don't owe it anymore. Then we have to reverse this half, meaning we're going to debit inventory. The inventory came back, and the amount of the inventory that came back was $240, and we're going to credit cost of goods sold for the $240. And in terms of our accounts receivable, then we have a reduction here of this $240 in terms of our T account. So of course the debits are still beating the credits, and now by that $3,610. So if I take that 3610 and we're going to take that and multiply it times the discount rate, if it was paid within the discount rate, we're going to say the discount is 0.02. That means that I'm going to put decimals on that. Home tab, numbers, add decimals. I'm going to go ahead and underline this. Multiply that out. We're going to say this equals the 3610 that is owed after the return times the discount. Means that we have a discount of 72. I'm going to add some decimals. 72.20. So our journal entry then is going to be something like this. We are going to say once cash is received, we're going to get cash, and it would have been for the 3610, but we got a 72 discount. And there's a couple different ways. I mean, I could put this number minus this number. It's also the fact that if they owed us 3610 and we've got a 2% discount, then we were paid 98%, right? So I could say times 0.98, and I'd get the same thing as if we took the 3610 minus the 7220. I'm going to add some decimals, home tab, numbers, add in decimals because they want some change on this one. So we got the cash, and then accounts receivable, I'll put this on the bottom, accounts receivable is going to go down, but it needs to go down by the entire amount here. So it needs to go down by the 3610, the entire amount that is in there. And then the difference, which we can calculate as, of course, you know, the debits minus the credits, or it's also just this amount we have here. If we add those two up, the debits then equal the credits, and that amount needs to go into sales discount. So sales discount will be that item, sales discount up here. So this is the final journal entry that we got to get to. We need to basically go through the story to get there so that we can see what was in accounts receivable before this transaction. Next one, a company purchased 11.7 of merchandise on June 15 with terms 210 in 45. So 2% discount if paid within 10 days, otherwise it's paid within 45 days, and FOB shipping point. The freight charge was $1,350 and was prepaid by the seller. On June 20th, it returned 2,160 of that merchandise. On June 24th, it paid the balance owed for the merchandise, taking any discount it is entitled to. The cash paid on June 24th equals what? Okay, so I'm going to go through the story again here. We're basically tracking accounts payable this time. So I'm going to break out the T account for accounts payable over here and just kind of make that up so that we can see that item. And so there that is. Alright, so now let's go through the story here. And I'll just do the journal entries. We could probably do this a bit quicker than this, but this will tell us the whole story if we do it this way. So our company purchased 11.7 of merchandise on June 15th. So we got merchandise. I'm going to call it inventory for short. And we got 11.7 debiting inventory, increasing inventory, and what will the credit be? Accounts payable. We didn't pay cash for it. It's going to be accounts payable. All right, the freight charges, and then if we track that in our accounts payable, then we're going to be over here. That's going to be the credit into accounts payable. And then we're going to say that there was freight charges. Now, this is the trick of this problem. This problem's a bit tricky because of these freight charges. They were paid, and we've got to pay back for them, but they're not going to be included in the discount. So what's going to happen is we're going to have an increase to the inventory because it's going to be part of the purchase price, 1350, that's the debit. The credit's going to go to the payable because it's going to show up on our invoice. So it's still going to go to the payable. It's going to increase the payable, but we're not going to get any reduction. We're not going to get a 2% reduction, in other words, on the amount that is freight. So I'm going to highlight that just to remember that, and that's kind of the trick to this problem here. That'll be a bit frustrating to look at. And then we're going to say on June 24th, it paid the balance owed. Okay, and then on June 20th, it returned some of the merchandise. So we returned merchandise, so that means the inventory is going to go down. I'll put that in first. Inventory is going down because we gave it back for June 24th, 2160. And then the debit's going to go not to cash because we still have the AP owed. So the balance owed then is going to be debited. So if we look at our accounts payable now, we would say, okay, the accounts payable, summing the debits, summing the credits. The credits will then win, and that's going to be the case all the time with accounts payable, of course, by the 10,890. That's what we would owe if we didn't have to account for this fact that we got this discount, but we got this discount now, so we need to account for the discount. So now this is where it's a bit tricky because we can't take the 10,890 owed times the discount because we're not going to get a discount on the freight here. So basically we have to take the discount before the freight, so the amount due is equivalent to the 11.7 plus the amount that was returned, or I could say, flipping the sign, this minus this. So if we subtract those two out, 11.7 minus the 2160, that's how much is owed that's not part of the freight. And that part we're going to get a discount on. We're going to get a 2% discount, which we could calculate as 0.02. and then I'm going to go to the Home tab, font, increase the decimals, 0.02, multiply that out. This equals this amount, not including the freight, times the 0.02. I'm going to go ahead and underline this. Home tab, numbers increase. Oop, that's not what I did. Underline. So let's do that one more time. This equals the 954 times 2%. That's the amount of the discount. Therefore, if that's the discount, the amount that we will pay is this minus this. So we're going to say the amount that will be paid is the amount that is owed, not including the freight, minus the discount here. And that'll give us the amount that we have to pay. And then we have to add to that the fact that we have this freight here. So we've got the 13050 that we have to tack on for the freight. I'm sorry, the freight is up here in green. That's why I made it green. 1350. And that means the amount that we are going to pay at the end of the day will be the 9349 plus the 1350. And that's going to be the 10699. Now that's what they're looking for here, but if we wanted to see the journal entry, we might want to just record that journal entry as well. So we know that cash would be credited. Cash would go down. I'm going to put that over here, a credit of 10699 is cash. Then we're going to debit the accounts payable. But remember, we're going to have to debit the accounts payable for the amount that is in here, which is the 10890. So we have to, because we're not going to pay the difference because we got a discount, we're not going to pay it back. So we got the 10890. We're going to need more credit. So this number minus this number is a difference, 191, which of course is the discount we got. I'm going to do that with a negative sum formula. So all I'm doing is saying this minus this is going to be the plug, so that this plus this equals the debits equal the credits here. Now you might be thinking we should put that to some account with discount in the name. But notice that this one is not going to be a discount because what happened is we overcharged our inventory. We put our inventory on the books for the amount before the discount, the 11.7 plus the freight, and it should be the amount after the discount. So we need to reduce it for the discount that we got because we overstated our inventory. And that's why we're going to credit the inventory in this case. Next one says that a company purchased 3950 worth of merchandise transportation costs, merchandise. Transportation costs were an additional 350. The company later returned 270 worth of merchandise and paid the invoice within the 1% cash discount period. The total amount paid for the merchandise is what? So in this case, once again, we're going to be tracking the AP. So I'm just going to make a T account for accounts payable over here and track that as we go. So I'm going to put an underline here and we'll put a line there completing the T. Okay, so the company purchased 3950 of inventory. So we're going to say inventory then is going to go up, and I'm going to try to put all the journal entries in here. And we paid for it not with cash, but with accounts payable. That, of course, would increase our T account. The payable is going up like so. So we're going to owe that at the end of the day. The company later, then transaction costs were an additional 350. Transportation costs were additional 350. So that's going to be included in this item here. So we're going to say that the transportation costs are going to be part of inventory, and that's going to be for the 350. And again, I'm going to basically say that we're going to pay that to the vendor. That's what this problem is assuming. So it's going to be on the invoice, meaning it's part of the payable, but we're not going to get the discount on that amount. So we got to basically be careful of that when we calculate our discount. It's not going to include that amount. And then the company returned 270 worth of merchandise. So we returned it. So that means the inventory is going to go down. So I usually think about that first. 270, that's going down because we're getting rid of it. We're going to debit something, and that debit's not going to be cash in this case. It's going to be accounts payable. So accounts payable, and our T account now is the 270. And so if we sum up our payable here, we've got the 270 debit, and we have the credit of 4300, meaning we have a balance of 4030. Now we're assuming that we are going to pay within the discount period, And so you would think we would take that balance due 4030 times 1%. But note that once again, it's not going to get a discount on this 350. We're not getting a discount on the 350. So what we'll have to calculate then is we're going to take this, let's put it over here. We're going to take the 3950, this number, and we're going to subtract from that the 270, and that's the difference. This, it's in essence this minus this, which is a credit of the 3680. So that's the portion that's not including the 350. Or you could do it this way. We could take the balance due 4030, and we're not wanting to include this 350. Okay, and then we're going to multiply that times the discount 0.01. And if I put my cursor there, home tab, increase, and I'm going to go ahead and underline that. And if we multiply that out, it's the 3680 times the 1%, giving us 37. So 37, and that means that we're actually going to pay then this 3680 minus the 37 there. And that's how much we would pay before the freight. So that's how much we would pay not including the freight. And remember that what they're going to do is they're going to tack on the shipping costs, and they're going to say, we're not giving you a discount on the shipping costs. So remember, that was this 350 that we took out. So if we add to this the 350, I'm going to go ahead and underline, home tab, font, underline. We're going to take the 3643 plus the 350. That's what we would actually end up having to pay at the end of the day. We may have to add some decimals to that, if depending on whether they want those or not. Now, I'm going to move this over here one more time, and they didn't ask for this. That's what they asked for, but if they did ask for the journal entry, we can put the journal entry in place, and that's the amount of cash that we're going to pay. So we can put that on the bottom. Cash is going to go out for, I'll put that here, this amount. I'm going to make it a credit with a negative. This amount's the amount that's going to go out. Accounts payable is going to be the other side of it, but the accounts payable, remember, is going to have to be the debit of the entire amount that's in there, which in this case is 4,030. And so the difference then, meaning the debits minus the credits, we need a credit here. So this number minus this number, if I highlight them both, 37, this 37 here, I'm going to do it with a negative sum, which is basically going to say this number minus this number, and flip the sign. That's the plug. That's that 37. We may need to add decimals, so we can add decimals if we want to. And we put the pennies in there. And again, you might be thinking that should be some kind of discount account, but what happened is we overstated inventory again. We overstated the inventory by the fact that we didn't account for the 1% discount. Now we need to account for it, reducing the inventory by the amount of discount that we are now getting. That's why we're reducing inventory with a credit of that 36.8.